That's NFLX and FOXA. TWTR Twitter announces live streaming partnership for MLBK.
Good morning, everyone. It's 8 a.m. Chicago time on Monday, the 25th of July, 2016. Thanks for joining this Trader Bite. Happy to be back and in the seat. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A few things to cover here. As far as overnight news, there really isn't much driving the markets. Right now, there was a German release. The IFO business climate came in a little bit higher, a little bit higher than expected, but disappointing with some disappointing results within. Looking at and I'm sure many of you heard that Verizon's buying Yahoo for 4 point something billion, even though some of Yahoo's assets in Japan and Alibaba are worth over 40, so that sounds like a great deal for Verizon. But looking at today, the calendar is very light. We've got Dallas Fed manufacturing at 9:30 Central, 10:30 Eastern, expecting negative 11.5. And as far as earnings after market, we get Gilead expecting 3.02. Other than that, there's really nothing here. It is Monday. So let's look at the week ahead. Tomorrow we get Case-Shiller on housing at 8 Central. We get U.S. Services PMI at 8:45, 9:45 Eastern. We get new home sales at 9 Central. We get consumer confidence at 9 Central, as well as Richmond Fed. Wednesday, we get GfK consumer confidence out of Germany at 1 a.m. Central, an hour before their markets, the cash markets open. The Eurozone M3 money supply, we get UK GDP, and we get US durable goods, pending home sales, as well as the crude oil, gas, and distillate inventories. And we also get the FOMC decision on Wednesday. Wednesday's the big day. So that's one that is likely to cause a grind here over the next couple of days, especially tomorrow. On Thursday, we get the German unemployment change, Eurozone consumer confidence final. We get German CPI. We get U.S. advanced goods trade balance and U.S. Kansas City Fed manufacturing. On Friday, we get UK GfK consumer confidence, UK M4 money supply, and several other numbers, net consumer credit, and so on. Eurozone CPI, Eurozone unemployment, and GDP Q on Q. The U.S. on Friday gets core PCE, GDP annualized, GDP price index, personal consumption, and employment costs at 7:30 Central, 8:30 Eastern. And then we get Chicago PMI at 8:45, actually released around 8:42 to subscribers. We have a couple of speakers on Friday, Fed Speaker Williams and Fed Speaker Kaplan. Other than that, it's a pretty slow earnings week. It's a pretty slow speaker week. There really isn't too much driving us this week, except, of course, for the big one, the rate decision on Wednesday. And I'm going to hold true to what I've said for almost a couple years now with these trader bites, that there's just no room for the Fed to raise rates. And I think the market knows it, and this is why we keep sticking to new highs. So I'm not going to review the last trader bite because it was over a week and a half ago. There's no sense in doing that. But what I could do is look at spend a little more time looking at longer term charts that set us up for our hypotheses for today. In catching up yesterday, there was some really interesting stuff. Crude oil, for those of you who trade it and who may not trade it and may not be aware, we're trading September currently, and that trend channel in crude oil is still intact. If you look at it on the 60-minute here, the prices need to be adjusted a little bit. I need to move this up, but if you shift this trend channel up, you'll see that it's hitting tops and bottoms. In fact, let's just fix that. I don't like when things are not aligned properly. So if we put this channel through here and put a parallel to it down at the low point, you'll see that we're still in this channel. Let's add a midpoint. So there's the midpoint of this channel. And as you can see here, we are trending down in crude oil, and we had a hard time. Before I left, I talked about the fact that it was in the mid, and to look for it either turning down from the mid, or um, here, let's clean this up, turning down from mid or testing the upper channel, but it's in a downtrend nonetheless. So you can see how it's skating against this lower trend line, and it broke it on Friday on the 60-minute here. So something to pay attention to on crude. We are tracking crude on a not tick by tick basis, but if you superimpose the ES on crude oil, you'll see that there is a correlation there. This is a weekly market profile chart. The last week I was here, we had a huge range. We still have a gap zone below. By the way, I did not update the flex levels. Um, did not update the flex levels yet for the S&P. I need to do a lot more homework to do that. They should be up within about an hour. If you're using flex levels for IRT, you'll see this gap pop up. But you can see here this week had a very, very big range. The week of July 11th, very big range all the way up to 2163 half or so. And then last week was very tight. It looks like I was off during what looks to be like a miserable week. I noticed that some of our automated systems, as well as the equity on the books for many traders, has gone down slightly. Just a grindy, difficult week, and that's in the cards. You know, it's the summer, and I do have some words of wisdom. You want to stick around for a little bit. Do have some words of wisdom on that, some trader wisdom on that. It's really important to note that it is the summer. But if you look at last week's profile, we continue to test up. We continue to push higher and higher, with Friday failing to take out the high. But look at this high here, very very weak high, multiple letters at the top. This is a 30-minute based chart on a weekly basis. You can see that the high has multiple letters, very weak high. I'm expecting this high to go, and it did overnight. The overnight high is a little bit higher now. The overnight high is 2172 and a half or so, which is up here. So it has taken out this weak high that we see. Look at this point of control here near the high. Lots of fuel here for this to continue higher, and it did overnight. That's what I would have predicted on Friday. Of course, hindsight's 2020, and I can't take credit for that. But overall, double distribution. We have a flat zone, and then we have a second distribution here with a taper that is very abrupt. Down here, this is going to be a flex level, a key LVN down here to watch. This level down here, if we get below this 2150 area, 2151, we're likely to see continuation lower and the repair of some of the auction below. By repair, I mean re-auctioning areas that were not properly auctioned or skipped through, like gaps, LVN zones, singles, things like that. Those are likely to be the next targets down if we get to below 2151. That's how things are shaping up. Let's switch gears to a higher time frame to build an even bigger context. Look at this monthly. Again, this is a monthly built on 30-minute time slots. And again, we see this terribly weak high. The month so far, July, pretty impressive range. June had some massive had a massive range. This is the June profile. This here is June. This here is July. We are 5 days or so away from the end of July, and we've got some pretty impressive range to the upside. The market has definitely taken a strong bid in July following the Brexit vote and the fear that came from that. And I believe, and this is just me speculating, I'm not caught up on all of the analysis and news and stuff. And I'm not an analyst. I'm a day trader. My opinion is that the market's expecting stagnation when it comes to interest rates, and it's expecting earnings to continue to be strong. So overall, The market's in a bullish mode, and you cannot ignore that. The overnight session last night, 173,000 contracts traded, a little bit lighter than the 200,000 mode. Where do I get that 200,000 from? I'll switch to the overnight chart only. I'll switch to a day chart, and automatically I get this profile down here, which is accounting for about a year's worth of data on a daily basis. And what that profile is telling me right down here, if you look at the mode, it's telling me that the most common or the most prevalent daily volume is 200,000, 400,000 being on the high side. And we are at the 173. So what we've got this session here is pretty light, fairly relatively light volume. Again, to be expected. Oops, wrong. 24-hour. To be expected for this environment for this time of year. The overall profile overnight has a balance. Has a balanced profile. It is the range is 63.75 to 72.50, approximately 9 points. It is nothing crazy. Notice that the point of control from Friday right here is in line with the point of control in the overnight. So essentially what the market has done is it has tested above and has found sellers and has put in an excess high, which you can see here by the dry up in volume. There's an excess high here and has moved back into the balance of Friday's range, basically telling us that the market is accepting Friday's point of control as a fair rate, as a fair price currently, given current market conditions. So that's important to note that we do have a balanced profile with a good amount of the volume sitting in the middle, giving us some pretty decent kurtosis here on this profile, which means that on the open we might get a little bit of energy to push through what we've got over the last couple of days. Given the way this has traded, we did close the gap here. We had a gap, we had a range gap that we left open last week on Thursday, and we closed that gap range, not the gap close, but the gap zone, which means high to low. We've closed that on Friday. However, this merits its own composite. So I'm going to work off of a new composite here built based on July 14th, last Thursday. Let's send that to the back so you can see the bars that formed it. And you can see from this profile that there's a considerable amount of volume near the high here with an LVN right in here at 64.5 or so. If you look across this line, let's put a line up here real quick. You'll see that there's a very distinct LVN that goes across these profiles right in there. So if you look at this line that I just put in, let's thicken that up a little bit. Okay, and extend it out. So if we look at this line, you can see right there, low volume node, okay? And that's what's building the low volume node down here. It is a high from this day. This level here is fairly important to keep an eye on, 2164 or so. 64 and a quarter. This is an important area to pay attention to. 2164. Notice the overnight low. Oops, didn't draw that right. The overnight low is 2163.75. This line here will be my over/under line, or my pivot line, so to speak, for today's session. I want to see the market break through here, break through the 64, retest, fail, and then get aggressive with the short side. Otherwise, because we're back in the range, we're back in the point of control, we're trading currently at 2166.75 with an overnight high of 2172.50 and an all-time high of 2169.75. I can only wait this morning, sit on my hands and wait for the long trade unless we break through that 64. And I'm not talking about that, the old, not to demean this way of thinking, but you know, a 5 minute bar close below that line triggers selling. I don't work that because why not 6 minutes? Why not 10 minutes? Why not 15? Why not 1 minute? Why not 2 minute? Why 5 minute? I don't really care that a bar closes below this line. What I do care about is that it falls through, retests, and that retest creates the opportunity for an entry for a continuation. And I'd like to see it break through in an impulsive way with an impulsive move and a shallow pullback for the trade towards the point of control. And the current point of control is down at 2060.75. 2060.75 is the primary target. That is the point of control of the composite right here. This black line you see going right through here, that becomes the key balance zone for this entire area up here. So we have a double distribution profile with a sharp kurtosis based on the 3 days here. We've got Wednesday, Thursday, Friday, all building volume up there. Despite the sell-off on Thursday, we still came back on Friday. We still balanced up here on Friday. There's a lot of energy pent up in this area here. I will not fade this area, meaning I will not get short into it. It just isn't a high probability trade, and I'm not in the business of taking low probability trades. Remember, we want the market to work. We want the participants who are against our trade to have to make an effort to push us into our stop. You don't want to take positions, whether you're in equities or options or forex or whatever, CFDs, whatever you're trading. It is your job to make sure that if you are going to take a stop, that your area that you're getting stopped out at is something that the market has to make an effort to get to. I talk about this in the AMA, in the AMAs. You can look at this on the videos and so on. And it's really important to understand that if you're getting in there for the sake of just putting a trade on and then putting your stop at the last bar's low, it doesn't take much of an effort for the market to get to the last bar's low. But if it has to work through a low volume node to get to the next high volume node, that there's a significant change here, which means that there's more room. You have to put in more room into your stop, which means you have to be better capitalized or trading a smaller product in order to maintain a good win percent and an edge. Okay, so anyway, it's a lot to get into for Trader Bite. The last thing I want to talk about is what's expected for today. What's expected for today is chop. Chop on the open. I'm expecting this to chop sideways, make an attempt lower, and then I expect it to push through the high. There's plenty of energy to do so. This will be hypo 1. We do have a flex level up above around 2185. 2185, 2175 is the first area to test. 2185 is the next double measured move target above. So as I said, expecting it to chop on the open, make an attempt lower, and then I expect buyers to step in and take this through the overnight high. That is your primary hypothesis. The secondary hypothesis is expected to be also chop. Then I'm looking for, if it does push through initially to the buy side, meaning it is becoming initiative, moving away from value. If it does become initiative, there's no way for me to hop on this long trade on the open without taking a sort of a blind shot at the long, which you can if you have a really wide stop on a swing basis or something. All things support, most pieces support the long side currently. But what I'm looking for is if it gets initiative and starts pushing higher, I'm looking for the shut off of buyers. I'm looking for sellers to be invited in through these higher prices, and I'm looking for a rotation down. Then I would be targeting 2164, 25, pull back, push through, pull back, and then the next target would be this 2160.75 VPOC. Leave a runner on and see if we can get something running and taking back basically what's happened between Thursday and Friday and trading this entire range. That would be hypo 2. We'll see what works out today. Last thing I want to tell you is it is July. I'm sure you're aware it's July. It is summer. Less is more in the summer. Summer months mean that it's unique that for the last couple of years we've had huge activity in the summer. I remember last year I was gone through a week in August, and that happened to be that big drop that tripped daily limits and stuff on the ES. And it's rare that that happens. Generally, the summer means you've got to be picky. The summer also means that it's a good time for you to work on your metrics, your error journaling, things like that. It is a good time to be very selective. If you are someone who is if you're a hunter and you like to go out there with a rifle and take a lot of shots, um, when it's in the summer, you want to become a very savvy sniper. You want to pick your spots. You want to be very selective. You want to reduce your volume in the summer. The opportunities are much lower in the summer than they are during other times of the year. Generally, we get the VIX collapsing, and which we're seeing here. We see a lot of grindy, low range trends, low volume trends, and then things pick back up at the end of August, and if not the beginning of September, right after Labor Day here in the U.S., the first Monday of September. That's when things pick up and the markets start taking a directional move. But through the summer, it generally is a very grindy period. The central banks don't do much. The numbers are just generally, the economic releases are generally not driving the market to any certainty at all. Although I would welcome a correction here, I would welcome a cleanse, a drop, and re-auctioning below. But anyway, what I wish is irrelevant to the market. But just remember, it is the summer. It is just not a good time to stake a lot of your account and be out of the game once the fall comes back and volumes pick up and the VIX picks up and in general things start to take the opportunities are increased in my opinion. Good luck today, and I'll catch you tomorrow morning. Thank you.